What's going on? Welcome back to Trending Stocks. Today I want to talk to you about Faraday Future. They just had their earnings after hours yesterday. I want to give you the good, the bad, and the ugly, everything that you need to know from Faraday. Before I get into any of that, make sure to hit that thumbs up. And with that said, let's get right to it. So starting off, at the time of doing this video, it is down 49.21%, 58 cents the low, 87 cents the high, and 267 million shares have been traded, 291 is the average. Based on the volume, a lot of it is linked to algorithmic trading, not necessarily institutions getting in, because you can kind of see today there's been only one transaction being done. Even on the dark pool, it shows as none, which is very, very abnormal. So definitely institutions aren't really looking at Faraday as a good long-term investment, and that is linked to their actual earnings. So I did live stream the earnings yesterday and the action that happened at that time. So it did have roughly a low of 88 cents. Then it started to pick back up to around $1.16. That kind of showed how just things didn't really make sense. And even if you kind of take a step back, all of this right here, as I've been saying, I did videos throughout this whole time period, I said that this is very, very exciting, but had nothing to do with their operations, because I've been doing videos for the last 2 years on Faraday, or roughly a year and a half, and their operations have had a lot of big red flags, and that was kind of apparent in their recent earnings. So I'm going to go over the good, the bad, and the ugly, and ultimately what to expect next from Faraday. So starting off, when it comes to their earnings, there's basically 2 or 3 things that you really needed to watch for. One of which was this. So the current outstanding shares. So it does show as of May the 17th, there was 439 million in Class A common stock. So that is very high. Based on what we last previously knew, on December the 21st, there was 42.41 million. So that does show from December 21st up until this point right here, there was a astronomical amount of shares being diluted. But then again, if you kind of zoom over here, so just looking at their cash, so these are some of the markups I did from yesterday, but they had just shy of around 2 million in cash. That's only cash. I'm not counting restricted cash right here, so just short term. And then they had quite a lot of inventory, so around 34 million in inventory. But if you don't have demand for $300,000 vehicles, you won't necessarily be able to sell them. But beside the point, 2 million in cash by itself. At this stage right here, it did show that around 42 million, that was the outstanding shares as of December the 31st. You can kind of see right here. So 42 million on December the 31st. And like I said, that massive jump up, and that was as of May the 17th. So definitely showed a lot of dilution basically after this point right here on December the 31st. And again, you can kind of factor in that was anticipated, because looking right here, loss from operations in 2023, 286 million. So if you do factor in that a good almost 6 months have passed since these numbers are, I guess, relevant, it kind of shows that they needed to dilute. And so that is why you have that astronomical amount of shares that have been just issued onto the open market. So not necessarily the best sign. But in this document right here, they do talk on quite a lot of things, one of which is they bring up the B word. And so that is definitely very, very damaging. So it says, if our securities are delisted by NASDAQ, we are unlikely to be able to raise sufficient additional funds in the near term, and as a result, may be required to further delay our production and delivery plans of the FF91, reduce headcount, liquidate our assets, file for bankruptcy, reorganize, merge with another entity, and or cease operations. So definitely not a good sign that they are using the B word right here. On a side note, they actually did bring up merge with another entity. So they did bring up a partnership quite a few times in their call. One was more of a bridge between China and the States. So they did say that they've been in talks with a big OEM in the States to kind of help with that transition, because with Biden doing that massive tariff on any Chinese vehicles, is going to make it very, very difficult for instance, Faraday to import their vehicles, right? So that's very damaging. But if they have that kind of bridge slash partnership with a big OEM, logically that would resolve that issue. So they didn't actually mention who, but it could be maybe Tesla, Ford, GM, or something like that. So that's not really being factored into the stock price in my opinion. So they did mention that. They also mentioned as well partnerships or possible partnerships coming that is out of the Middle East and I think more specifically UAE. But still, definitely that is kind of a good thing. That also could be seen as them dangling a carrot in front of investors just to kind of entice hope. Aside from that, this I definitely did see as a very big red flag. In this document itself, they actually do mention bankruptcy 31 times. So that is, again, a very big issue. And moving on right here, just scrolling down. So in this section right here, so it shows risks related to FF operations in China. So they do even bring up the fact that just them being in China might result in them leading to bankruptcy. So I saw that as another big red flag, but I kind of highlighted this. We do not have sufficient cash on hand to meet our current obligations and are unable to generate cash through our ATM program or via our registration statement because we are not currently S3 eligible. So I kind of highlighted this because that CFO who was talking yesterday, he actually did say that they plan on looking at ATM or continuing the ATM program. So this is a little bit more back and forth. It doesn't logically make sense. So something definitely didn't add up when it comes down to that aspect. And so in reality, it shows that they might be fully capped out for funding. And even during the call itself, they did say that they're going to be really pursuing notes. So definitely something to kind of consider. In this document, there's a lot of, I guess, speculative points to bring up. One thing as well, it did show that they are focusing on commercial vehicles, no timeline or anything like that. But I think in reality, that might be possibly their next transition, their next move is just to focus on this because that they can simply just import, assuming they get all the regulatory approvals and then just sell them. So that might be the next big thing, a lower price point and whatever else. So who knows, there might be a pivot coming in Faraday's future, a little bit of spin on their name, but in reality, there's 231 pages in this. They do kind of just repeat themselves quite a lot. And the moral story is that they are very strapped for cash. And conveniently yesterday, Ortex was not updating their numbers. As of right now, though, it does still show them as on the threshold list. 17.71% of the free float is being shorted. So that probably is a very big shock to a lot of people because previously on, as you can kind of see on the 10th or May the 9th, it was at like 128 or 129%. That's estimated, of course. So they have gone down tenfold. So let me know your thoughts on that. But 6.75 million shares overall are being shorted, and then cost to borrow average is 13.96. And just to quickly go over here, factoring in that 17%, they're also only assuming around 42.67 million is the outstanding shares. So now knowing as of the 17th of May that it was like 400 million plus, definitely that is going to make the whole short interest percentage probably like 1%, 2%, something like that. So definitely something very interesting to note. And like I said, based on this, I think it was right here, part number 60, where it does say that they need to stay on the NASDAQ just for liquidity purposes. Technically, with it now trading below $1, that is where it gets into more of a sticky scenario. So I kind of went over this in my live stream yesterday, but right now with their earnings underway, they kind of hit that rubber stamp. So they are now rectifying that 10K deficiency. So now it's just two deficiencies that's kind of under the NASDAQ. So that's the 10-cent bid price rule and then the $1 bid price rule. Normally what happens is any company appealing their delisting with the NASDAQ, they pay $20,000 and it goes to a hearing panel. And then ultimately Faraday or the company needs to provide a plan on how they want to rectify the deficiencies. And then the NASDAQ will make a decision whether they approve it or not. If they say no, then they get delisted. So kind of a touchy thing. Normally what happens is that the NASDAQ will receive their plan and say, hey, you know what, if you can get over $1 for 10 to 20 consecutive trading days, then you know what, you are good to stay on the NASDAQ. So given Faraday's recent price action, it actually was very looking good at least. So I think it was 8 consecutive trading days above $1. So logically, today does break that trend. So this is once again not really going to help Faraday compliance wise. And definitely that is going to be a very big thing. As you can kind of even see, if it does get delisted, then they are going to really pretty much head towards reorganization or bankruptcy. And especially based on their cash and how much in expenses they're incurring, kind of shows that they will be needing to file sooner rather than later. So in reality, like I said, there's two different ways to view Faraday. One is their operations, which technically is not good at all, and I've been saying that for a very long time. And then the aspect or the B side of that is Faraday being a squeeze play, which kind of caused all of this right here. So Faraday, yeah, it's down quite a lot. I see on Reddit a lot of people are still very hopeful about Faraday, but is it worthwhile to invest right now? It all depends on you. So if you feel that based on the operations it's worthwhile, then so be it. If you're getting into it because of it being a squeeze play, I don't know. It definitely seems to be very down and out based on this. But then again, these numbers sometimes could be lying. So you never know what the true short interest is, especially if there is kind of aspects of naked shorting and whatever else. So let me know your thoughts on Faraday. I know I did skim through a lot of their earnings, and there is a lot of other positives as well as a lot of other negatives, but for the most part I did give you the Cole's Notes version of it. So just kind of that they are struggling with capital and technically not really much for future hope. On a side note as well, they didn't actually give 2024 guidance as far as any production or anything like that. So definitely another red flag. Let me know your thoughts on Faraday. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And even though Faraday does what Faraday does, take advantage of some free promos, and that is with Moomoo. Simply sign up for a new account, throw $100 at it, and they give you 7 fractional shares of the Mag 7. So a pretty kick-ass deal. Link in the description below and also the comments. With all that said, appreciate all of you watching.